Okay, good morning, everyone, and welcome. I think we're going to wait just a bit. We have about half of the participants we're expecting, so we'll give this just another minute or two. Okay, everyone, welcome once again. My name is Dan Nelson. I'm the president of Visual Media Alliance here in San Francisco. It's a delight to have you all aboard today. Our program today is the COVID-19 legislative relief efforts, both at the state and federal level. We're delighted to have with us our government affairs specialist, RJ. We'll introduce him in just a second. There's been a lot of interest as we talk to all of you through this challenging time. There's been a lot of interest in the payroll protection program loans that you've all read about. You know, this has been a welcome lifeline for all of our members. RJ will be covering that subject today. I also want to welcome our friends from Printing Industries of San Diego that are with us today. We do a lot with PIASD, and we have about 15 or 20 members from PIA San Diego, so welcome to the webinar also. I want to talk a bit about this challenging environment. We're talking to all of you, and this is one of the biggest challenges I can remember, having been with this organization for a few years and through several serious downturns, and this is a big one. So, and this is probably the worst time to have this webinar in terms of not knowing what the future looks like. I keep saying, you know, we're going to see the light at the end of the tunnel sometime, and hopefully soon, but it's really a challenge out there as we talk to all of you. And I just want to express, you know, your association team is here for you, all of us on behalf, all of us on staff, including our insurance operations, you know, both on the health side and the commercial side, with David and Mary and Renee and all the people you talk to every day. On the health side with Deirdre and Deidre and Lena. We're all here for you, and so please reach out when you have questions. On our association team helping out on this program, we have May and Sonali, and you're going to hear from Shannon in just a second. You can see her just above me in the video, or below or beside. I want to talk a little bit about our government affairs effort in general. We put a lot of time and effort into government affairs, both at the state and national level. Jerry Bonetto, we're fortunate to have two government affairs specialists, both Jerry, who many of you know, he's been aboard for so many years, almost 30. And of course, he's our resident expert in all sorts of key subjects like sales tax and workers' comp and safety. He knows a lot, so he's available for all questions. Both North and South, San Diego and VMA here in Northern California. And our newest addition is RJ, who we've worked with for 3 years, and he's just so well connected up in Sacramento. We had a government affairs summit this last summer and met with the legislators that he lined up, and it was an excellent program and really productive. And of course, he's our presenter today. And lately, he's working on a specific effort. This week has been, we've been knocking ourselves out trying to include printers as essential businesses. And we're still hopeful that that the governor may see exactly how essential our industry is. You guys know it, we know it. You're printing items that are absolutely critical in this downturn. And we've been cataloging that. So again, thank you all for attending. I'm going to turn it over to Shannon. She's going to say a few words about some of the programs, specifically the Think HR program, which has a host of resources and will help us answer some of these more specific questions today in this webinar, when they get really technical. So again, thank you all for attending. I'll turn it over to Shannon.
Thanks, Dan. So we, both at VMA as well as PIASD, we're really trying to pivot and just support all of the questions and our members and the industry as a whole. So some of the ways that we're doing that, as Dan mentioned, is Think HR. So Think HR is a complimentary program for all of VMA members. And Karen's going to work with the San Diego members as well. So they have just a wealth of resources from webinars. They've done 2 webinars so far on COVID-19 that are archived, and then you can watch those. They also have a library with forms and documents and white papers that you can look through. And then they have advisors, so a hotline as well as an email chat where they'll get back to you. Normally it's about 24 hours, but they seem to be a little bit, understandably, backed up. So it's gonna be a little bit longer, but they will get back to you. If you don't have a username and password, you can reach out to Jessica at vma.bz. We'll include this in the slides at the end to get set up with a username and password, and then Karen will help you get set up from the San Diego side. We've also set up a COVID-19 webpage with resources that we're just continuing to add, from all of the things on FFCRA as well as the CARES, how to obtain loads. And that is, you can access it from our homepage, or it's at main.vma.bz/COVID-19. And again, we'll add all of this into the slides and the information at the end. We've sent out about 5 different alerts with the most up-to-date information. They're going to be on our COVID-19 webpage as well, and we're going to keep doing these as long as we need to. One other thing that we're going to do is a flash poll in the next couple days, and if you guys could just take a look at that, spend a few minutes to just answer the questions on what you're doing as essential business and what projects you're working on, that'll really help us with the lobbying efforts as we send all of that to RJ. It's really, really important to keep fighting for that as an essential business. We'll do more webinars as needed. If you have specific ideas, questions, experts, send those on to me or Dan, and we will work on getting those together. Thanks for all of you for joining. And if you have any questions, you can email me or Karen, Shannon at vma.bz or Karen at piasd.org. And lastly, if you have questions as we're going along with this in this webinar as RJ is speaking, can you please put your questions in the Q&A box, which is in the bottom panel of your Zoom screen. We'll respond after both the California and the federal sections. The slides and recording will be emailed and also available on our COVID-19 resource page. And I think that's it. Back to Dan. RJ is going to take the show.
Thank you, Shannon. Yes, let's turn it over to RJ. RJ, are you there?
I am. Thank you. Can you hear me?
Yes, great. Thank you.
Well, thank you everyone for joining today, and we'll get through the slides here momentarily. But first of all, I just want to say, it's times like this. I used to work in an association myself, and it's really times like this where associations become so valuable for the amount of information that they can provide. And your teams, both at the Visual Media Alliance and PIASD, have done a great job. I've been working with them, as Dan mentioned, for a couple of years now on legislative efforts here in Sacramento. But, with this new environment, it's going to be absolutely important that you stay close to what's happening at the government level because of all the legislation that's incoming, regulatory changes that will be happening in short order. So it's really important that you continue to participate with your respective associations, and you're in really good hands with your teams here. And so I can't say enough about them. So quick shout out for them and for putting this webinar on. So my name is RJ Cervantes. I'm a lobbyist, legislative advocate here in Sacramento. Our firm, we're a smaller firm. We work primarily with Fortune 500 level companies who are trying to influence the California state government, but we do also service a number of associations, both statewide and national. And so it is my honor and privilege to represent the printing industry here in Sacramento. And what I'm about to get into here, we'll do a review. Hey, Dan and May, I don't think I have control over the slide, so you might want to hit the next slide if you don't mind. But what we're about to get into, sorry, everybody, just quick little difficulty there. We're about to get into just a review about the responses from both the state of California as well as the federal government. We'll talk about the Families First Coronavirus Response Act, the CARES Act, which is the most recent legislation that the Senate recently passed and President Trump signed. And then we'll get into some agency actions on the federal level that are ongoing with the IRS. And then we'll also talk a little bit about our advocacy efforts that we've been doing here. So as Dan mentioned, we are trying very, very hard to get the printing industry at large listed as an essential business. The PIA, Elizabeth Lyons, who's your national lobbyist, is working very hard on getting the printing industry listed on the federal list. We are hard at work here in California to try to get the industry listed on Governor Newsom's list as well. And so we've been pretty much every day, I think Dan and Karen and Lou Karen down at PIASC, they're getting tired of hearing from me pretty much every day. And I've had to try to direct kind of some of that advocacy push, and we're still ongoing with that, and hopefully we'll have a successful result here shortly. But if you can go ahead and hit the next slide, please. Okay, so just a quick summary about what's happening in California, and then I'll get into the meat and potatoes here. So all of the emergency services and basically the entire function of government right now is in the hands of Governor Gavin Newsom, and he's directing all of that response in coordination with his Office of Emergency Services. They have a command center here in Sacramento where they're tracking everything from food logistics to shutdown orders, traffic patterns. I mean, you name it as it relates to this crisis. They are ongoing with those efforts there at the Emergency Crisis Center here in Sacramento. The legislature, some of you who follow Sacramento may have seen that the legislature has gone on a emergency recess because they can't follow the CDC and local guidelines of having social distancing while being in the Capitol. And so the legislature, those members have gone home to their districts. It was initially reported that they would come back on April 13th. That was a very aggressive timeline. I think all of us knew that was not going to be possible, just given what's happening on the ground with infection rates. And so it's yet to be determined when the legislature will come back. But prior to leaving, they did give the governor substantial power to combat this crisis through the state budget. They do need to review another state budget prior to June 15th. And so as we're doing this webinar, they are hard at work trying to figure out how the legislature can function electronically and over products like Zoom or WebEx, et cetera, to try to get that bill process and that budget development process up and going. State agencies are also hard at work. I'll get into that in a second. And so I want to encourage all of you to remain vigilant, because we have already seen some guidelines come out from groups like Cal-OSHA. We're expecting many, many more. And so what we're going to present today, what I want to stress, is by no means a comprehensive list of everything that's ongoing, but also it's by no means a final list of what's going to happen. There's already discussions about a fourth federal stimulus bill that will be another large program for small businesses. So we're going to talk today about the PPP, or the Payment Protection Program, but we expect that there will be a number of other efforts out of that bill. And then on the state level, Governor Newsom has already organized a working group to look at a large economic stimulus program here in California as well, using some bond financing, because that is the scale of the difficulty that we're dealing with. So on the state of California, what I'll review today is some tax filing changes. The Public Utilities Commission, which regulates the investor-owned utilities. So if you're paying an investor-owned utility like a PG&E or down in San Diego Gas and Electric, then that slide will be germane to you and your business. There's some payment flexibility I'll go over. The WARN Act, which is an existing law dealing with having to notify the state and your employees of any type of pending layoffs within your business. So I'll go over some of the changes to that program that the government has already decided to implement. A pretty innovative program called the UI Work Sharing Program that's done through the Employment Development Department, EDD, here in California. I'll go over that as well. And then some of the initial guidelines that we've seen out of Cal-OSHA. And that's an ever-changing environment as well. So as I mentioned, please do stay on top of what's happening with your regulatory agencies as well. Okay, if we can go to the next slide. Thank you. Okay, so in terms of tax filing extensions, there's really three large changes that have ongoing. So first of all, the Franchise Tax Board has postponed until July 15th the filing and payment deadlines for business entities for your 2019 tax returns, your tax return payments that are due, 2020 first and second quarter estimate payments, 2020 LLC taxes and fees, and any other type of non-wage withholding payments that your business may have with the Franchise Tax Board. All of that has been moved to July 15th to try to come into line with recent changes at the IRS, which I'll go over a little later. But the state of California initially pushed tax filing deadlines back to June 15th. So you may have seen some guidances out there that that was going to be the deadline, but they have since extended that even further to July 15th in order to line up with the IRS. This activity has big implications on the state budget because as the budget, the 2020-2021 state budget needs to be worked on and finalized by June 15th. Having the accurate revenue projections of how much money is going to be come in is an extremely difficult undertaking right now, just due to the economic slowdown. And so some of this activity is going to be a moving target, but for right now, we think that they'll hold true to this July 15th deadline on filings and payments. And so a little flexibility there for businesses that has come from the state, from the FTB. Next slide, please. Thank you. So the Employment Development Department, if your business has been directly affected by COVID-19, you can request up to a 60-day extension to file your state payroll reports and deposit your state payroll taxes without any penalties or interest. You do have to write a quick mention that your business has been impacted by COVID-19 in your request for that extension. Your request has to be received within 60 days from the original past due date of the payment or return. If you have questions about how to get that extension for your business on your state payroll tax filings, please do call the EDD Taxpayer Assistance Center. They can be reached at 1-888-745-3886. And again, I think we're going to be emailing this, if I'm not mistaken, or this webinar is going to be shared with every participant. And so you'll be able to see that phone number as well, again, in the future. On property taxes are really, really tricky, and the government has not quite figured out how to create some consistency with property tax payments. At this point, each county has done a patchwork of different extensions or rules. Some have decided not to move any of the deadline dates, and therefore in individual counties there may not be any flexibility with property tax. So depending on where your business or property is located, and this goes for both residential and business property taxes, please do visit your county tax assessor website to determine if your county has extended any deadlines, because if you need to try to get that flexibility, you'll have to go on an individual county by county basis at this point. There may be some type of statewide rule that we'll see in short order to try to force the counties to come into one set group of parameters, but it's unexpected at this point. And so please do visit your individual county tax assessor websites. CDTFA, so a couple of things. This slide is actually a little outdated. There was a program that was announced yesterday as well. So let me just first get into the first change with CDTFA, which is the California Department of Tax and Fee Administration. So they are providing a 90-day extension for a tax return or tax payment to any businesses filing a return for less than $1 million in tax. So for the approximate 99.5% of business taxpayers below the $1 million threshold for their California sales and tax or use tax obligations, the returns for the first quarter will now be due on July 31st of this year. So the same provisions are going to apply to the other tax and fee programs that you may have to pay with CDTFA depending on your individual business circumstance. If you go to cdtfa.ca.gov, at their homepage, you will see a COVID-19 direct a button you can press on to figure out all of the CDTFA CDTFA programs that are available to businesses at this time. They also, I'm trying to pull it up right now, it was just announced yesterday afternoon, but CDTFA is also allowing a free deferral of sales and use tax payments of up to $50,000 if you have less than $5 million in taxable sales for your business. They are doing a free deferral of up to $50,000 for businesses as well. So again, if you go to cdtfa.ca.gov, you'll be able to see the two flexibility options they've given the business at this point. The first one being the 90-day extension, and then the free deferral on $50,000 in sales and use taxes, penalty and interest free. Next slide, please. Okay, the Public Utilities Commission. So this gets into any type of energy payments that you may have at your business. The PUC has ruled on two different flexibility options. So first on disconnections. So for the time being, while we're under this crisis, all electric and natural gas investor-owned utilities. So again, in Northern California, that's PG&E, and in San Diego, that's San Diego Gas and Electric, are suspending service disconnections due to non-payment for both residential and commercial customers until further notice. But I think for most businesses, they're going to be interested in this flexible payment plan where the electric and natural gas IOUs are offering customers the ability to create unique flexible payment plans based off of your business needs if there is a financial hardship that you've incurred due to this crisis. So if you visit your utility websites, they have there on their homepage is a COVID-19 resource button there that you can just click, and then they'll have the appropriate information on how to get signed up for that flexible payment plan that's been approved by the PUC. Next slide, please. Okay, the WARN Act. As I mentioned earlier on, the WARN Act is an existing law that requires businesses to try to give a 60-day notice of any type of mass layoff, a relocation of your business, or any type of termination. And so the governor, back on the 17th of March, did issue an executive order which allows temporary suspension of that 60-day notice requirement to the state of California, but you still do have to give your employees any type of notice, a written notice that they have to be warned that a mass layoff of your business is incoming. So this executive order did not suspend the WARN Act in its entirety, so I want to be careful to mention that to all of you. But if you are in a situation where you are having to make the difficult decision to lay off employees, please do be mindful of the WARN Act, and to discuss it with either the association's HR team, but also if you have legal counsel, please do be mindful of this WARN Act. There is this new flexibility though, where they are waiving the 60-day notice requirement to the state that you would have to give, but that's the only flexibility that they've given at this point under that law. Next slide, please. Okay, this is a unique program that not a lot of folks are knowledgeable about at this point. I think it's going to gain in popularity here in short order, but the Employment Development Department, EDD, does have what's called the Unemployment Insurance Work Sharing Program. An employer can apply for this program if they are seeing a reduced amount of production or services or other conditions that would lead to layoffs. What this program would do is provide an alternative to layoffs where you would balance compensation that the company could give with the employees' UI benefits. So the idea is to try to keep people working, keep them in their current jobs, get them unemployment insurance benefits, try to help them avoid financial hardships, but it also allows employers to try to eliminate the need for layoffs, because I know in our industry it's so important that we keep our workforce going, and we want to keep our workers as much as possible because of the specialized training that's needed on equipment and so forth. And so we want to make sure that we have those folks working in jobs. And so what this would allow an employer to do is to try to balance the payroll costs that your business is incurring. If you're seeing a reduction in jobs and production, what this allows you to do is try to balance that those two payments, the UI benefits and then the employee's normal compensation, to make the employee whole on their compensation. There are some requirements, though, that we'll get into here in the next slide. If you don't mind changing next one, please. Okay, so in order to participate in this program, there are some requirements that the employers have to meet. And so it's important that if you're interested in looking at this as an option for your business, may not be for everybody, but it is an option that is on the table, at least here in the state. So number one, you already have to have a state employer account number, which hopefully everybody on the webinar does through the state of California. Number two, at least 10% of your regular workforce and a minimum of 2 employees would have to have been affected by reduction in hours and wages. So that's kind of the minimum threshold, or hours and wages must be reduced by at least 10%, but not exceed 60% reduction in hours and wages for your employees. And so those are some of the minimum thresholds that on the hours and wages side you have to have met in order to participate in this program. Health benefits, you can't change those while you're going through the UI work sharing program. They have to remain the same. They have to meet the same standards that the other employees who are not participating in the work sharing program would get. Retirement benefits, same thing. They have to remain the same. In the event that you have a collective bargaining agreement with organized labor, the collective bargaining agent of the employees and the bargaining union has to agree to voluntarily participate, and they also have to sign the application for work sharing that the EDD puts together. But again, that's only for in the event that you are a unionized employer. You have to identify the affected work units, identify each participating employee by their full name and social security number. And you also have to notify those employees in advance of your intent to try to get them to participate in this program. You can't just decide unilaterally that you're going to do this. And so you have to have a notification of those employees that you intend to enter into the UI work sharing program. You also have to identify how many layoffs will be avoided by participating in the program. And then EDD does have the option to request reports and documents related to the work sharing plan that you've implemented. And so next slide, please. Okay, sorry. So if you are interested in participating in that program, please do visit edd.ca.gov. And on there, again, they're pretty much all the websites that I'm referencing today. If you go to their homepage, there's a large button or link to their COVID-19 resources page. So at the EDD, they do have the UI work sharing program explanation and forms that you would need in order to participate in that program if your business is interested. So those have been the what I would say would be the beneficial programs that the state has identified thus far to allow business flexibility. Again, there's going to be more. We'll probably have to do another webinar in another month just to review all the other changes that are incoming, both from the states and the feds. But there are still the threats of regulatory burdens on companies. The government hasn't completely shut off, and so some of these folks are interested to make sure that employees are being treated fairly at this point. And so the first one right off the gate is Cal OSHA, and so they have instituted an interim COVID-19 guidance for employers. At this point, it's not unique to anything that's not already happening across the country. But what that interim guidance does say is that employers have to follow the recommendations from the CDC and specifically their interim guidance for businesses and employers to plan and respond to the COVID-19 that was released back in February. So if you do not have a current COVID-19 plan in place for your business, you do have to make sure you are following the Cal OSHA guidance, which when you read it is essentially saying you have to follow the recommendations from the CDC and very specifically their interim guidance that came out back in February 2020. So if you Google the CDC interim guidance for businesses, February 2020, you will find that document. It's much too lengthy for me to review on this webinar, but it's pretty much the same stuff you're hearing in the news: social distancing, hand cleanliness, those types of standards you have to implement in your business if you're going to continue to operate at this point. And so this is not going to be the only Cal OSHA regulatory guidance that will come out. I can guarantee it. There's a lot of chatter about a national mask standard. We're starting to see that bubble up in the media the past couple of days, where even in California, there's been some discussion about a statewide mask standard. And so you may see a guidance come out of Cal OSHA that stipulates that employees have to be wearing some type of facial protection in order to be operating, even if you have implemented social distancing standards or other measures in your business. So if you have not implemented any of those plans, you need to do so immediately. And I know the association's HR team will probably be able to point you into the direction of the CDC guidelines. And again, remain vigilant, because this is not going to be the only standard that we'll see come out. This has been the one thus far. Next slide, please. Okay, so let's pause there. I think we wanted to review some of the questions. If you have questions about the state's response thus far, we'll get into the federal here momentarily, but if you have questions about the state response, go ahead and put that in your chat box down below for us to do some Q&A. We'll take a pause right now and do that, and then I'll get into the federal response for the next few slides once we take that break. So I don't know, Dan.
I got you, RJ. So this is Shannon. So the question is, can an employer utilize both the UI work sharing program and the PPP?
Yes, to my knowledge, if there is no restriction on you doing both. So there are two separate programs. One's the state program through the UI work sharing. The other is the PPP. I'm not an expert on how to blend that together for your individual business needs, but there is no restriction on your ability to do so. What I would encourage you to do is to speak with the HR team that the association has as a benefit for its members, and get a read on how to implement that for your individual business case.
Thank you. Okay, so next question is, how many masks are we required to provide for each employee, and which type?
That has not been implemented. So the discussion over a national mask standard has not been released. We know it's being talked about. We know that they're considering it. We're seeing some of that bubble up in the media the past couple of days. Everybody's probably seen the Dr. Fauci, who's up on stage with the president during his daily briefings. He has come out and said that we need to implement some type of national mask standard as well. So that's being bubbled up. What I'm recommending to folks, though, is to start thinking about how to get some mask or some type of facial protection. Very, very hard to come by right now, just due to the extreme demand on that for our medical personnel out there. But we do know that it is being talked about that a mask standard could come into place. And so, I don't have the specifics at this moment. Couldn't even tell you exactly what mask to get, but I think it's important that folks be prepared that we may see some type of standard come online if business is going to continue to operate as we go through this crisis.
Okay. Next question. Under the PPP, can you reduce the employee comp by more than 25%?
Well, we'll get into the PPP here in a minute. That's out of the CARES Act. So I'll review some of that, and then we'll come to those questions at the end.
And then this might be covered after as well, but do owner distributions in lieu of payroll and commission payments to contractors count as payroll?
Yeah, we'll have to get into that at the end there. Yeah.
Okay.
Yep. Okay. Any other questions?
One more. So is there a template that you're aware of on social distancing protocol for essential businesses?
So yeah, if you go to the CDC guidelines, there should be, if you Google the CDC interim business guidelines for COVID-19, there is some structure around what you're supposed to do there on social distancing requirements. I don't think it's, and again, the thing I want to remind folks is you got to be flexible here, and you got to keep an eye on the guidances that are coming out from the government, because this is going to shift. Standards are going to change. We've already seen that day by day. But if you do visit the CDC guidelines, that is what Kalosh is saying to folks they need to follow. And so that's the first place I would point folks to. But again, be vigilant for changes that are forthcoming.
Okay, and then, let's move on to the federal, and we'll have more questions after that, I'm sure.
Great. Okay, so on the federal response, we'll review the Families First Coronavirus Response Act, or the FFCRA, which implemented the paid leave structures of the response. Then we'll get into the CARES Act, the Coronavirus Aid, Relief, and Economic Security Act, which just recently passed, a ginormous economic stimulus bill there that has some very important elements to us, including the PPP program. It also implemented some amendments to the FFCRA that you need to be mindful of, because there's been so much information put out there to businesses about these paid leave programs that it's important to understand the nuances of all that and how to stay on top of those changes. Then we'll get into the SBA, their Economic Injury Disaster Loan Program, which is another program that is available to businesses at this point. And then also some IRS deadline changes, just namely moving the goalpost back to July 15th. So first, the FFCRA. This program, this is the House of Representatives. This was their bill that they put together. This was also known as Phase 2 of the coronavirus response legislative package. We'll probably see phases 4 and 5 here in the next few weeks, but this was the first one. This law is in effect from April 1st, 2020 to December 31st, 2020. It covers all private employers with fewer than 500 employees. So if that's you, this is what you need to follow here. That law, the FFCRA, implemented 2 categories of leave. First is the paid sick leave. Employees are eligible for up to 2 weeks or 10 days in total of paid sick leave, subject to an 80-hour cap for full-time employees. Then it implemented expanded family and medical leave. So after you've taken your 2 weeks of paid sick leave, employees who have been employed for at least 30 days at your business may be eligible for an additional 10 weeks of partially paid expanded family and medical leave for reason number 5. And I wrote this in a way where if you're referencing the actual PowerPoint, so I know this is going to be emailed out to folks, you'll be able to reference the reasons that are stipulated in law. So we'll get into that here in a minute. There's also, though, a very small business exemption. If you have fewer than 50 employees, you may qualify. And again, keyword there is may, for an exemption from the requirement to provide leave due to school closings or childcare unavailability for your employees if the leave requirements would jeopardize the viability of your business. That, though, is very, very tough to get. There's a number of standards you would need to try to showcase and prove to the government in order to get that exemption. So it is available, but very, very difficult to get. So next slide, please. Okay, so these are the eligibility standards, as I mentioned before. This is what makes an employee eligible to get the paid leave. So again, that's 10 days of emergency paid sick leave at first, and then the extended family and medical leave after that's been used. So number one, the employee has been subject to a federal, state, or local quarantine or isolation order related to COVID-19. In the Bay Area, for example, this shelter-in-place order would definitely fall under that. Number two, the employee has been advised by a healthcare provider to self-quarantine due to concerns related to COVID-19. Number three, the employee is experiencing symptoms of COVID-19 and is seeking a medical diagnosis. So if they have fever, they have those symptoms that have been so widely publicized in the media, then they would definitely fall under that eligibility standard there. Number four, the employee is caring for an individual who is subject to number one. So if they're caring for somebody who's been subject to local quarantine, or they are caring for somebody who's been advised by a healthcare provider to self-quarantine, then that is also eligible. Number five, and this is what gets into the small business exemption, but also the extended family and medical leave, is caring for a son or daughter of such employee if the school or place of care of the son or daughter has been closed or the child care provider is unavailable due to COVID-19. That makes you eligible. There's some other little nuances there related to conditions. It gives the Secretary of Health and Human Services, the Secretary of the Treasury, and the Labor to identify other medical conditions that could fall under, although I'm not sure at this point those guidelines and what that is going to look like has been specified, but the law is very clear. It gives them the flexibility to expand the eligibility for other conditions as well if they so choose. And then number seven, though, if a business makes a decision to close or cancel work shifts for business reasons, neither the emergency paid sick leave nor the expanded family leave will apply in this case to pay out this paid leave, as they are available only to employees who are not working due to the specified reasons above. So if you just shut your doors and you don't have anybody who's falling under these isolation orders, or they're not seeking a medical diagnosis, all these standards we've outlined, if you're just closing your business, then these paid leave requirements don't kick in. That will be separate benefits that the employee will be eligible for in these legislative matters. Next slide, please. So here are the pay rates on the paid leave structure. So this is for the full-time employees, for those of you who have full-time employees working at your business. If an employee is out for that they've been subject to the first three standards, subject to a federal, state, or local quarantine or isolation order, that's number one. Again, number two, been advised by a healthcare provider to self-quarantine, or number three, they have symptoms of COVID-19. The sick leave must be paid at the employee's compensation, but is capped at $511 a day and $5,110 in the aggregate per employee. If an employee is out for reasons 4 through 6, which they're caring for an individual who's been subject to an order, they're caring for somebody who's quarantining due to advice from a healthcare provider, or if they're caring for a child who's been affected by this, then the sick leave has to be paid at 2/3 the employee's required compensation. That is capped though at $200 a day and $2,000 in the aggregate per employee. The calculation for paid benefit leaves under the FFCRA is based on the employee's regular rate of pay, subject to the caps that I've just mentioned. So all of this is going to be on a case-by-case basis of what would work for you in your business. What I would encourage you to do in terms of trying to calculate what these pay rates would look like on your individual cases is to work with the association's HR team to try to come up with a structure on what that would look like for your business. Overtime, though, worked by an employee has to be included when you're calculating the number of hours paid to an employee in a single work week, but it's subject to that 80-hour cap. However, the premium, what you would actually pay the employee, is not used to calculate your regular rate of pay for the purposes of trying to figure out how much you pay in paid leave. And so some nuances there with overtime. The overtime amount of work can be used to calculate the number of hours that you have to figure out for the paid leave, but the actual overtime premium pay isn't used to calculate that rate. And so again, would really encourage you to, most of the people I would imagine who are on this webinar are subject to these paid leave structures. And so I would encourage you to work with the association's HR team to figure out exactly how to structure your payment plan under this new program. Next slide, please. There is also a rate for part-time employees. So what the law that was passed stipulated is that for part-time employees, you as the employer have to calculate the average number of hours an employee works in a 2-week period to determine the amount of emergency paid leave that the part-time employee is entitled to receive. In the situation where you have an employee where their hours vary, you can use a 2-week average for the past 6 months. You'd have to go back and try to calculate that. If the employee has not been employed for the previous 6 months, the employer can look to the number of hours that the employer and the employee agreed that the employee would work upon hiring. If there isn't an agreement that was put into place at that time, you should use the average number of hours per day the employee was scheduled to work during the term of employment. So a number of, if, ands, or buts under the part-time employee structure. Again, would encourage you all to visit the human resources team that the association has for your benefit. Next slide, please.
Hey, RJ, we've got a couple questions that are related to the FFCRA, so let's jump in and do those right now, if that's okay.
Sure.
So one of them is we have a generous PTO policy that employees can use for sick as well as vacation. But there is no requirement to use part of it for sick time. Do we still need to set aside a separate 10-day sick leave?
Yes, my understanding at this point is that you do. But let's, if that person doesn't mind sharing their contact information with you. And
yeah, I have it.
Okay, great.
Shelley, we'll get back to you on that.
Great. Yeah, we can get an answer to that,
okay.
that question.
And then the other question was for FFCRA eligibility for a Bay Area business, does standard number 1 trigger if the business is deemed an essential business?
So if you're if you are working under the auspices that you are an essential business, then no. This is only in place if you have folks who would fall under these specific standards. So, well, actually, let me take that back. Excuse me. It doesn't matter if you have folks who are still working, but they've been told, for example, that healthcare providers told them, hey, you need to self-quarantine, then yes, they are eligible for this paid leave, even though you are an essential business. So if that makes sense. So if your business is operating, you're working, But let's just say an employee comes to you and says, hey, I've been advised by a doctor that I have to self-quarantine, then yes, they are eligible for this paid leave.
Okay. We'll do one more and then we'll move on. If you have under 50 employees, do you still have to offer the extended family medical leave?
You can apply for that small business exemption. However, and you would go to the Department of Labor. They have the process in which you would apply for that exemption. There may be some additional filings you would have to do with the Small Business Administration. But again, that's very, very difficult to obtain. The intent of the law that was passed was to try to fit everyone as much as possible into the paid leave program. But they did offer this specific reference to an exemption, but it is very, very difficult to get. You would definitely need to consult with the HR team to try to get that done for your individual business.
Okay, thank you. And yeah, let's move on.
Okay. So you do have to, on paid leave, this new program, you do have to give notice to your employees that this is available to them. If you're following under the law, which most people I imagine on this webinar are, you are required to post a notice, just like you would with other HR requirements, both state and federal, if you are the owner of the company. You can, however, satisfy the notice requirements by emailing or direct mailing the notice to employees. You would post the notice on employee information, internal, external website. That counts as well. Since the law only applies to current employees, the notice doesn't have to be shared with laid off individuals who have already been laid off prior to this time frame. You can get the notices free of charge by contacting the Department of Labor's Wage and Hour Division, and you can contact them at 1-866-487-9243. They also have them on the U.S. DOL, the Department of Labor's website, which is dol.gov. You can get the notices there as well by visiting their COVID-19 resources button on their website. So the good thing, though, about this paid leave is it is being reimbursed by the federal government. Employers can receive up to 100% reimbursement of the paid leave pursuant to the Act. Health insurance costs in that time frame are also included in the tax credit that you would get for reimbursement. You don't face any type of payroll tax liability for these costs. And then self-employed individuals, if there are any in the webinar, you can also receive an equivalent credit for yourself there too. So the reimbursement will be an immediate dollar-for-dollar tax offset against payroll taxes. Where a refund is owed, the IRS will send the refund as quickly as possible back to you. There were some concerns, sorry, if you can go back really quick. There were some concerns about how quickly the tax offset would get in the hands of businesses. There were some concerns in the immediate term about cash flow. And so FFCRA passed this program, but then the CARES Act went ahead and amended some of these elements on the reimbursement to try to alleviate some of the concerns with the cash flow. So if you go to the next slide. So you're under the FFCRA, since you are required to bear those upfront costs and receive that dollar-for-dollar reimbursement from the IRS. Again, there were some concerns how to do that. So they've created through the CARES Act a streamlined process where you can request an advance of your anticipated tax credits and refunds. So if you've done the analysis of how much you would need under this program to implement, you can get some advance through the IRS. It also provides penalty relief for any employers who don't deposit the employer side of Social Security taxes in anticipation of receiving the tax credit for paid sick and paid FMLA leave. The IRS is releasing guidances on how to try to grab these advances. Some of that is going to be released on irs.gov. So they'll be putting out a complete guideline. The HR team that the association has as a benefit to all of you also has the ability to get that guidance and to help you get that advanced tax credit dollar for dollar reimbursement in your hands. So it's a way to try to alleviate the cash flow concerns that businesses were saying they were going to have under this program. Next slide, please. Okay, the CARES Act. So this is probably the most popular program that's been getting a lot of attention. Today's actually one of the first days it's been open to folks to apply for. First of all, let me just say, if you're at the end of this conversation, if you say to yourself, I should definitely sign up for the Paycheck Protection Program, I want to tell each and every one of you that you should apply immediately. Because there's a lot of concern about the availability of funds. There's been so much demand. There's a big lobbying effort to try to expand eligibility for this. And so in terms of a finite amount of resources being available to companies, I think the early bird gets the worm, so to speak. And so we really encourage you to get on the ball, get going with your application process in order to access these funds. We know that Congress is talking about a phase 4 bill, which will be structured as an additional doubling down of these programs in some fashion. But again, we don't know exactly how much money is going to be in that pot. We don't know the eligibility requirements. So if you say to yourself after listening to this, yeah, that's something I need to sign up for, you got to get on the ball today. There's been so much demand already. I just got a text a little while ago that community-owned banks, just in 5 hours of the program being open for applications, just the community banks, this doesn't include the large banks, it had already hit the $1 billion mark in about 5 hours. And so you definitely want to get going with your application. With that said, here's what this program does. So the intent is to provide cash flow assistance through 100% federally guaranteed loans to employers who maintain their payroll during this emergency. The intent is to try to keep people on payrolls working. If employers maintain their payroll, the loans would be forgiven, which would help workers remain employed. There is a time frame in which the forgiveness period would last, but which would help workers remain employed, as well as trying to keep businesses and the economy to try to get them to snap back quicker after this is all said and done. It's got a host of attractive features. As I mentioned, the forgiveness aspect of up to 8 weeks of payroll based on employee retention and salary levels. There is some requirements for you to track that in order to get that forgiveness. There's no SBA fees. You can also get at least 6 months of deferral, up to a maximum of up to a year, to provide some flexibility there. And then small businesses and other eligible entities will be able to apply if they've been harmed between February 15th, so a little retroactive, to June 30th. So if you are in that window, you decide this is for you, you are eligible for this program. But again, finite amount of resources, would encourage you to apply as quickly as possible. Loans are available, again, through that June 30th timeframe. Next slide, please. So a little more about the PPP. So depending on your business's situation, the loan size will be calculated in a few different ways. The maximum loan size is always $10 million per entity. So you can't go beyond that. But if you were in business between February 15th of 2019 through June 30th of 2019, and I'm not exactly clear on why they picked those specific dates retroactively to 2019. I think it's probably just for IRS tracking purposes on how much you were paying employees. Your max loan amount is equal to 250% of your average monthly payroll cost in that time frame. If your business is a seasonal employer, the max loan is equal to 250% of your average monthly payroll costs between that time frame. You can also opt to choose March 1st, 2019 as your period start date if you choose to. If you were not in business between February 15th, 2019 and June 30th, 2019, your maximum loan amount is equal to 250% of your monthly payroll costs between January 1st of this year and February 29th of this year. If you took out an economic injury disaster loan through the Small Business Administration, and I'll get to those momentarily, between February 15th and June 30th, if you were early to that program, you applied, you're in that game, and you want to refinance that loan just due to the attractiveness of this program, you would add the outstanding loan amount to the payroll sum for purposes of calculation on the CARES Act. Next slide, please. So what costs are eligible for payroll? So compensation, salary, wages, commissions, and other compensation, payment of cash tips or equivalents, payment for vacation time, parental, family, medical, or sick leave, allowances for dismissal or separation. If you had employees that you dismissed or separated under those time frames, that's eligible. Payments required for the provisions of group healthcare benefits, including insurance premiums, payment of any retirement benefits that you paid out to employees, and then payment of any state or local taxes assessed on the compensation of employees. That's also eligible for the purposes of determining your payroll averages under this program. Next slide, please. So what are the allowable uses of the loan proceeds once you've been approved and you got it? You can do payroll cost, as noted before, costs, all the payroll elements that I mentioned before. So costs related to the continuation of group healthcare benefits during periods of paid sick, medical, or family leave, and insurance premiums, employee salaries, commissions, or other similar compensations, payments of interest on any mortgage obligations that you have in your business. However, it doesn't include any prepayment or payment of principal on your mortgage obligation, just the interest. Rent, if you have rent under a lease agreement, that's eligible for the loan. Utility costs, again, going back to the PUC though, there is some flexibility. I would encourage you, if you're looking at trying to reduce your energy costs, now's a good time to do it. And then interest on any other debt obligations that were incurred before the covered period that your business may have taken on. So you can use the loan proceeds for these purposes. Next slide, please. So what are the loan term interest rate and fees? For any amounts not given, which again, there's that 8-week period that you could utilize for forgiveness. The maximum term is 10 years. The maximum interest rate is 4%. There's 0 loan fees, 0 prepayment fees. The SBA is establishing application fee caps for lenders that do charge. So that's in process right now. And then how is the forgiveness amount calculated? So forgiveness is on a covered loan is equal to the sum of the following payroll costs incurred during the 8-week period compared to the previous year or time period proportionate to maintaining employees and wages. It excludes compensation though over the first $100,000 of compensation you would give to an employee. So the payroll costs plus any payment of interest on any covered mortgage obligations, not including prepayment or payment of principal on a covered mortgage obligation, plus any payment on any covered rent obligation and any utility payments. And so you could combo those into a forgiveness plan in that covered 8-week period. And then that's 100% forgiven by the US federal government. SBA.gov is the website that you want to visit. They have the application processes outlined up there. You need to speak with your bank. The very first place I would go to is the bank that you're currently using. Most banks are participating in this program. There was some concern about JP Morgan Chase and their ability to do so, but I think they've announced today that they are going to participate. So if you use JP Morgan, they're online now with the program as well. So SBA.gov, first place to visit, and then second is to contact your bank that you utilize for your business in order to get set up. So how do you get that forgiveness? You have to apply through the lender. They're going to have an application process. You're going to have to document the number of employees on payroll, their pay rates. You got to do some other showings of filings under that. You're going to have to keep those documents in order to verify through that application process. Documentation on any covered mortgage obligations, again, only on the interest, not on prepayment or payment of principal, lease obligations, and then your utility cost. You have to certify that the documentation is true and the amount that's being forgiven was used in accordance with the program's guidelines. You have to certify that that is accurate. The U.S. Department of Justice has already said they will prosecute folks who are abusing this program. So I want to make sure that you have all your documentation related to taking advantage of this as well. Next slide, please.
So RJ, can we jump in and do a couple of PPP questions since we're...
Sure.
Okay, so first question is, some banks are waiting for more guidance regarding the applications and are not accepting yet. Do you recommend we apply via internet application or mail?
From what I'm being told, and this is just, this obviously isn't official guidance by any means, but the messages I've been getting today in terms of the rush to get these resources, I would look immediately to trying to figure out how to apply. So that would be more amenable to do that online versus the mail.
Okay. And next one, we have about 1/3 of the shop working part-time from home and about 2/3 on furlough collecting unemployment. Can we use the PPP in some way to keep people on payroll so we don't lose them, even though we might not have work for them at the time?
Yes.
Okay. And then do all of our employees actually have to be working full-time for us to be eligible?
You got to keep them on the payroll.
Okay.
So, but again, what I would encourage folks to, your individual business circumstances, everybody's going to be slightly different in how they operate, how many employees they have on furlough, et cetera, the balance of this. That's why it's important to get some direct HR consultation, just to make sure that you've got all your ducks in a row as it relates to this program. So I would encourage folks to reach out to the association's HR team to get that settled.
Okay, and one more. If our business bank is not an SBA lender, what are our options for applying for the PPP?
Well, as far as I am aware at this point, you can still access the program through another financial institution. And so if you visit sba.gov, you can see the programs, the institutions that are participating, which are substantial. So my understanding is just because you bank with somebody who's not offering it doesn't mean you can't go get it through another institution. So I would encourage you to visit sba.gov in order to check that part out.
Okay, and then a comment from one of our board members, Steve Decker, thank you, Steve, is that Chase launched at 9 a.m. this morning, B of A launched today, as well as Wells Fargo's launching soon. So that's inside intel.
Yep.
Thanks, RJ.
No problem. In addition to the payment protection program, the CARES Act did authorize a tax credit for employee retention. The thing I want to stress right from the beginning, though, is if you are going to participate in the Paycheck Protection Program, you cannot access this tax credit. They are separate programs. You can't do one or the other, or excuse me, you can't combo both of them for your business. You have to choose one program over the other. So I want to stress that before I dive into this tax credit. So for whatever reason that the PPP is not for you, you don't want to access that, and this tax credit may be an option for your business. So what does this tax credit do? It's a refundable payroll tax credit for 50% of wages paid by eligible employers, which all of you are, during this crisis. So the credit is available to employers, including nonprofits, whose operations have been fully or partially suspended as a result of a government order limiting commerce, travel, or group meetings, which in all of your cases, you've all been are under some type of government order, especially in the Bay Area. The credit is also provided to employers who have experienced a greater than 50% reduction in quarterly receipts, measured on a year-over-year basis. Wages of employees who are furloughed or faced reduced hours as a result of their employer's closure or economic hardship are eligible for the credit as well. If you have 100 or fewer full-time employees, all your employee wages are eligible regardless of whether an employee is furloughed. The credit is provided for wages and compensation, including health benefits, and is provided for the first $10,000 in wages and compensation paid by the employer to an eligible employee. Wages do not include those taken into account for the purposes of payroll credits for required paid sick leave or paid medical leave. So going back to the FFCRA, you can't take those into account under the wages for the purposes of this tax credit. So the credit, though, again, want to stress, not available to you if you were going to participate in the payroll protection program. It's a separate deal. You have to choose one or the other. If you're interested in this tax credit, we can get you more information, but this is also online via sba.gov under their COVID-19 structure on their website. You can get more information about this tax credit and how to access it if you so choose. Next slide, please. Okay, so some of you may have been familiar with SBA's economic injury disaster loans. If you applied for those loans, because they're at the beginning stages of this crisis, SBA, especially through the state of California, California was one of the first states, because the way these disaster loans work, they have to be authorized by the federal government after a petition from a state. And so the state of California through Governor Newsom was very aggressive to try to get these loans up and going early on for businesses. And so if you were one of those folks who applied, this grant program would apply for you. I'll get into the EIDL here momentarily. For those of you who have not applied for that program, it is still an option for you. I'll get into that in a minute. This is for folks who already did. This is what the CARES Act, which was passed, granted in this scenario. So what the CARES Act allowed for is grants to provide an emergency advance of up to $10,000 to small businesses and private nonprofits who have applied for that EIDL resource. And so you've had to have already applied, and then you can request the advance. You would do that through sba.gov. The advance does not need to be repaid under any circumstance. You can use it to keep employees on payroll. You can use it to pay for that sick leave. You can use it to meet increased production costs due to any type of supply chain disruption, pay other business obligations, including debts, rent, and mortgage payments, but only on interest, not on principal or prepayment of principal. And so it's a $10,000 grant if you do apply for that EIDL program, which I'll get into here momentarily. It's if eligible for businesses who are operating as far back as January 31st. It's going to go forward to December 31st. So if you've already applied this is an option for you. Next slide, please. So this is a description of those EIDLs. Again, those are the economic injury disaster loans that are handled through the SBA. What these do is they offer up to $2 million in assistance. The loans, though, it's a program that doesn't have a forgiveness element to it, but there is maximum flexibility into this program. You can use it to pay debts, payroll, accounts payable, and other bills that you can't meet because of the disaster's impact. The interest rate is 3.75% for small businesses. Again, it's up to $2 million in funding. The interest rate for nonprofits is 2.75. They're offering very long-term repayments in order to keep them affordable, up to a maximum of 30 years. However, the terms of the loan are determined on a case-by-case basis. You have to work directly with the SBA to get this up to $2 million in funding. And so if you're interested in participating in this loan program, which all of you are eligible for, you have to contact the SBA's Disaster Assistance Customer Service Center. That can be called at 1-800-659-2955, or you can email disastercustomerservice@sba.gov. You'll be contacted by an SBA representative and they can start the application process for you. You can also find information on this program just by visiting sba.gov and their COVID-19 resources page. There's a link there as well for you. So again, up to $2 million in assistance, no forgiveness aspect to it, but you do have long-term repayment plans up to 30 years on these loans in order to keep your business viable at this time. Next slide, please. Okay, and then finally, just really quick, most of you probably are already aware, but the Treasury Department and the IRS has already announced that federal income taxes, the filings, the payments, they've been moved from April 15th to July 15th without any penalties and interest, regardless of how much money you owe Uncle Sam. Not going to experience any penalties or interest for this move. The deferment applies to all taxpayers, including individuals, trusts and estates, corporations, and other non-corporate tax filers, as well as those who pay self-employment tax. You don't have to file any additional forms to get this extension, or you don't need to call the IRS. It's going to be an automatic tax filing and payment relief. If you need additional time beyond the July 15th deadline, though, you can request a filing extension on your personal taxes by filing a Form 4868. And then for businesses, though, for business taxes who need additional time beyond that July 15th deadline, you've got to file a Form 7004. Okay, I think that's, is there any other slides? Okay, so let's go ahead and take any final questions.
So the rest of the questions, we will answer them offline. So we've taken notes and we'll get back to each and every one of you to answer that. And if you have more questions at any time, email me or Karen. Our email addresses are right here. We will email you the slide deck by tomorrow latest. And again, answer any other questions. Thank you so much, RJ, for your time and for spending just so much tireless time fighting for our industry and supporting our industry for the benefit of our members. Really, really appreciate it. And we look forward to seeing you again if we have another webinar. And again, send all ideas and questions to me and Karen. Thank you all.
Thank you. Have a great day, everyone.
Have a great day.